Welcome back, investors, to Ticker Time News. I'm Adam, and investors are not happy with SoFi's agreement to purchase Technisys for 84 million shares of SoFi stock, or about $1.1 billion. The online lending, investing, and personal finance company SoFi expects the acquisition to add a cumulative $500 to $800 million through year-end 2025 at high incremental rates. SoFi also anticipates the deal closing in Q2 of 2022. Now, Technisys looks like a solid fit for SoFi. The company specializes in cloud-based banking software for finance companies, typically built on top of inefficient legacy platforms that struggle to keep up with competing fintech alternatives. Given that SoFi's core business involves around student loans, its user base caters primarily to younger generations. Therefore, by offering simplistic and robust tools to house various financial accounts, such as banking, loans, credit cards, and investments, all on a clean interface, Technisys keeps up with the expectations of younger clientele. So on the surface, this is clearly a solid fit for SoFi. So why are investors dissing this merger? Okay, before I give you my 3 reasons why, could you smash that like button, share this video, and click the first link in the description to get my top 10 stocks list and so much more. And if it's your first time watching, click subscribe. Thank you, my friends, for doing that. So why aren't investors cheering on this merger? First, Technisys' current sales are relatively light, even though the company has been around since 1995. For 2021, the company is on track to generate around $70 million in revenue. SoFi stated that Technisys growth is accelerating, but the prospect of reaching $800 million in cumulative revenue by the end of 2025 may be a bit too ambitious. To achieve this goal, Technisys would need to have a growth rate around 40% annually, based on the company's predicted $70 million in revenue for 2021. Next, SoFi is paying too much, flat out. Even at a 40% compound annual growth rate, SoFi is still paying around 4.1 times fiscal year 25 revenue. Meanwhile, if Technisys can only generate $500 million in total revenue, which is at the bottom end of SoFi's range, SoFi would be paying about 7.6 times fiscal year 25 revenue. And lastly, and this is a big one, a share-for-share transaction dilutes current shareholder equity. At 84 million shares, the transaction amounts to about 10% of SoFi's current outstanding share count. And how much did SoFi fall today? About 10%. Although this is not a massive piece of SoFi's market cap, an all-stock deal does tend to signal less confidence by management in its ability to achieve synergies. And synergies just means the two companies work better together than alone. So if the two companies cannot find synergies, then why is SoFi diluting its shareholder equity to buy this company? That's a great question. I guess it could be to add revenue to the top line, but I hope it's more than that. Now, when you see an all-cash deal, this tends to signal management has confidence in its ability to achieve synergies, and there will be cost savings because of those synergies. It also doesn't help that SoFi is currently trading at around 6.6 times forward sales. It also does not help a stock currently trading at about 6.6 times forward sales, a high multiple given the Federal Reserve's hawkish stance. Overall, SoFi's agreement to acquire this cloud-based fintech is being met with a bunch of skepticism surrounding the merger's details, ambitious sales targets, and of course, costs. But still, as SoFi continues to focus on branching out from offering only student loans through a suite of personal finance options, its purchase of Technisys is an excellent step towards capitalizing on becoming a one-stop shop for individuals' financial lives. I think it will turn out to be a solid fit, but the price SoFi is paying is just too high. Well, that's what I think about SoFi's acquisition plans right now. But I want to hear from you. What do you think about SoFi paying $1.1 billion for this fintech company? And remember, your comments make these videos so much better. Smash that like button, share this video, and click the first link in the description to get our top 10 stocks list and so much more. And if it's your first time watching, click subscribe. For Ticker Time News, I'm Adam. Thank you so very much for watching, and I'll see you in the next video.